Hello and welcome back to Global Value. In today's video, we are performing a fundamental stock analysis of ONEOK Inc., ticker symbol OKE, Oak as in Oklahoma. We're looking at ONEOK today because it's been an established business that also has one of the higher dividend yields in the overall market right now. Currently, they have a dividend yield of 6.9%. Their stock is trading for $54.80 per share. Over the past year, the company's share price is down about 16%. Over 5 years, their shares are about flat. Over 10 years, they're only up at a rate of 1.5% compounded annually. However, going back prior to the global financial crisis, going back almost 18 years here for ONEOK, the company has returned 8% compounded annually. Add on to that their high dividend yield, and they've returned quite a bit for shareholders over this time, although it does look like, based off of their chart, that the business has been cyclical over this period. Not surprising, as the business deals extensively in natural gas liquids. So we're also looking at ONEOK today because the business is about $4 over their 52-week low, which is down more than $20 from their 52-week high. They are a large business. They have about a $24.5 billion market cap. For more background about the company, ONEOK provides natural gas gathering, processing, storage, and transportation, as well as natural gas liquids, transportation, and fractionation. It owns extensive assets in the Mid-Continent, Permian, and Rocky Mountain regions. ONEOK operates 17,500 miles of natural gas gathering pipelines, 1,500 miles of FERC-regulated interstate natural gas pipelines, over 5,000 miles of state-regulated intrastate transmission pipeline, 6 natural gas liquid storage facilities, and 8 natural gas product terminals. It serves a variety of customers in the energy business, and the company was founded in 1906 and is headquartered in Tulsa, Oklahoma. So for our fundamental analysis today, we are performing the Select 6 analysis, taking a checklist-style approach of 6 standard financial metrics to come to a holistic and beginning understanding of ONEOK based off of their business fundamentals. So this analysis is still a work in progress. It's an opportunity to learn in public, so it's going to continue to improve and get better over time as we keep going. With that said, let's get right into today's analysis. Starting off here with metric number 1, we want their average return on capital over the last 5 years to be above 14%. So there are a couple of reasons for this. The first is that the average publicly listed business earns about a 7% return on capital. And the second is that over the long run, over the course of decades, a stock is going to return approximately what its underlying business returns. And these underlying business returns are captured here by return on capital. So by looking for 14% or higher, we can potentially build in some margin of safety for ourselves based off of the overall quality of the business being about twice as good as average. So throughout this time period, ONEOK earns very stable returns on capital. They produce returns on capital that have been in the high single digits to low double digits over this time. Over the last 12 months, they're producing about 12% return on capital. Averaged out in a given year, they're earning about 10.3% return on capital. So while that is slightly better than average, that's below the 14% mark we're looking for. So this is going to be an X to start things off on metric number 1. Metric number 2, here we're taking a high-level overview of the cash coming into the business. We want their revenues, earnings, and free cash flows to have grown over this time. So this metric is all or nothing in nature. Either all 3 of these are going to be up for a check, or if even one of them is down, this entire metric will be an X. So over this time, they've grown their revenues by about 25%. They've also more than 5x their net income, although it looked like it was coming from a pretty low base in 2017. So looking through their income statement will give more background there. Then they've also more than doubled their free cash flows over this time. So while they did have less than stellar years for free cash flows in 2018, 2019, and 2020, they have bounced back strongly in 2021 and over their last 12 months. So all 3 of these are up, and this is going to be our first check here on metric number 2. Next up for metric number 3, here we're taking the perspective of an individual shareholder in the business by looking at ONEOK on a per share basis. We're looking for 5-year earnings per share growth here. So this is going to build off of our previous metric, where we saw that their earnings increased over this time, but we're also taking into account their shares outstanding. Looking at their earnings per share, we see that this has increased. This has more than doubled during this period. At the same time, their earnings are up nearly 5 times. That's going to cue us into the fact that ONEOK has been diluting shareholders over this time. And when we look at their shares outstanding, ONEOK has actually diluted existing shareholders by about 49% over the last 5 years. So this is not great to see here, because when you purchase a share of stock, what you're really buying is a fractional ownership percentage in that underlying business. So when a business issues new shares and dilutes existing shareholders, they're decreasing your ownership percentage in the business, which is ultimately going to decrease the percentage of the business's profits that you're entitled to. So while ONEOK's profitability has gone up as they brought in more earnings, even though those earnings are greater now than they were 5 years ago, as a long-term shareholder in the business, your percentage of those earnings would have gone down over this time frame. So they've grown their earnings faster than they've diluted shareholders, but this is quite significant shareholder dilution still. Nonetheless, this is another check here on metric number 3. Metric number 4 is going to be very similar to metric number 3. Here we're looking for free cash flow per share growth over this last 5 years. Again, we learned that they grew their free cash flows, and here we're seeing that their free cash flows per share growth was again not as fast as their free cash flow growth. This is because of what we learned that they diluted shareholders over this time. Their free cash flows per share are up over 5 years, and this is another check here on metric number 4. So far through our first 4 metrics, we are 3 for 4 to start things off. One other thing to note here is that over extended periods of time, a business's earnings and free cash flows should be roughly the same. So while there is some discrepancy here in 2018, 2019, and 2020 with their pretty nominal free cash flows, and they actually had pretty negative free cash flows in 2019, you just want to check that over extended periods of time, these two are roughly balancing out. Next up for metric number 5, we want their net debt, which is long and short-term liabilities minus cash and short-term investments, to be below the amount of free cash flow that they produced over the past 5 years. So this is going to help us evaluate how leveraged the business is. We don't want to be investing in overly levered businesses because during economic downturns, it's highly levered businesses that are at the greatest risk of potential bad outcomes. ONEOK is a bit of a different story from a normal business that we'd be looking at. Because they're a natural gas pipeline operator, these businesses tend to employ a lot of debt to begin with. So it's already likely that they're going to have more debt than we'd be comfortable with analyzing a more typical business. Even still, over this time, they've accumulated about $4 billion more in net debt, growing their net debt from $9 billion to about $13.7 billion currently. And because of the ups and downs that they've had with their free cash flows, net, the company has only earned $500 million of free cash flow over this time. So they currently have $13.7 billion of net debt, and they've only brought in about $500 million of free cash flows. So even by the marks of natural gas pipeline operators, ONEOK looks like it's employing a ton of leverage in their business. For this to be sustainable for the business long term, we'd have to see that their free cash flows, which have rebounded since being down prior to the pandemic, would need to stay in the black here and would need to continue being pretty steady to be able to support these debt loads, even as they're operating a pretty essential and somewhat regulated energy business. So this is going to be an X here on metric number 5. We'll learn later on some resources that you can dig into to learn more about their debt loads in more depth. Then our final metric, the big metric of them all, metric number 6, we want their average free cash flow to their total enterprise value to give us a yield that's above 5%. If this is the case, this will give us a slight risk premium to the yield of the 10-year treasury and would give us a reason to potentially be interested in the business. We're using their total enterprise value here because it is a more realistic economic picture of the company than their market cap is alone. Total enterprise value is taking into account both their market cap and their net debt position. It's more akin to ONEOK being a private business. Currently, they have a total enterprise value of about $38 billion, and we learned that in the last 5 years, they've only produced $500 million of free cash flow net, which means that they're only producing $100 million of free cash flow in a given year. So when we divide their $100 million of average free cash flow by their $38 billion total enterprise value, that is only going to give us an average free cash flow to enterprise value yield of 0.2%. So that is extremely low on an average basis, and that's going to be an X on metric number 6 here. However, it is worth noting that over the last 12 months, the company has produced $1.8 billion of free cash flow. So to get an up-to-date picture of the company's current free cash flow to enterprise value yield, when we divide their $1.8 billion of their current last 12 months of free cash flow by their $38 billion total enterprise value, that gives us a current free cash flow to enterprise value yield of 4.7%. That number is just slightly above where the rate of the 10-year treasury is at currently. And while they don't have the average free cash flows that we'd like to see for a more sustained track record of the business could still be potentially attractive here based off of their high current free cash flow yields. Then again, ONEOK is currently paying out a 6.9% dividend yield, so here we're looking at their dividend profile. While it's easy to be attracted to a company because they have a high dividend yield, people often make mistakes by blindly chasing dividend yield or dividend track records. Instead, it's important to look at the fundamentals of a business to determine if their dividend is well supported by that business's underlying profitability, and if it would be healthy and sustainable going forward for the company. We're not going to have a perfect answer here for ONEOK due to its excessive leverage. In that case, because of how levered some of these assets are, EBIT potentially is a more appropriate measure here than their cash flows, because as a natural gas pipeline operator, they have to spend quite a bit of money on CapEx. So that was actually why their cash flows were down so significantly in 2019. However, using their cash flows, the company has only been able to support their dividends per share in one of these years. Thankfully, for people who are interested in the business for its dividend yield currently, that supported year was this past year in 2021, and it looks like over the last 12 months, they've also been able to support their dividend payments. While it would have been more ideal that the business would have been able to produce cash flows that could have sustained this dividend in all 5 of these years, it's at least a good sign that they were able to cover it with their cash flows in last year. Again, because of the structural dynamics of both this industry and ONEOK as a business in particular, the information that we'd get from looking at their dividend profile here would seem to be a mixed bag. So if this is a reason you're potentially interested in the business, you would definitely want to look at this in more depth and learn more about how management is approaching capital allocation, how they're balancing their dividend payouts with the very high debt loads that the company is employing. So in summary, ONEOK checks the box on 3 out of 6 of our metrics. They're earning just slightly above average returns on capital, but they're not quite up to where we wanted them to be. Their business has grown over the last 5 years. They've increased their revenues, earnings, and free cash flows. However, they've diluted existing shareholders by 49% over this time. Even despite their pretty high dilution, per share metrics are up over this time as well. Then, even for a natural gas pipeline business, the company looks like it's employing a lot of leverage. Currently, they have nearly $14 billion in net debt, and over the past 12 months, they've only produced $1.8 billion of free cash flow. Additionally, over the last 5 years, they've only produced $500 million of free cash flow when their positive and negative cash flows are balanced out together. Then looking at their cash flow to enterprise value yields, then their current free cash flow to enterprise value yield looks like it is potentially attractive for the business. That would be one reason to want to do more research about ONEOK. However, their average free cash flow to enterprise value yield, because of a ton of spending on CapEx in 2019, looked pretty poor and is well below where the 10-year treasury is at currently. Additionally, we looked at the business's dividend profile, and while they are paying out a 6.9% dividend yield currently, and in both the last calendar year and over their last 12 months, the company has been able to support their dividends with their cash flows, they were not able to do so in the 4 years leading up to that previously. So keep in mind that this type of analysis is not a buy or sell recommendation of any security. It is not financial advice. And before considering any potential investment decision, please consult with the properly licensed and registered financial and legal professionals. This analysis instead serves as a beginning and holistic starting point to help you determine whether it's worth your time to dig in and learn more about ONEOK. If you're interested in learning more about the business, I would highly recommend that you start with the company's filings. You can read through their historical 10-Ks to get a history of the business and their operating results. Management will also outline some of the potential risks that the company faces, and you can get a better sense of the industry that they operate in and the regulations that they're beholden to. Additionally, you'll also get an understanding of both the character and the competence of management, especially as it pertains to the business operations going forward and their capital allocation approach. So as a value investor, you want to research a company as if you were going to own 100% of it, where you can truly understand the essence of that business and know all of its ins and outs and understand what's important and what's not about the company. Through this further research, you can learn more about both the quantitative and the qualitative aspects of the company and come to your own understanding of what's an appropriate intrinsic value for ONEOK. So with that said, that's it for today's fundamental stock analysis of ONEOK Inc., ticker symbol OKE. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about ONEOK with me, and have a great day.